The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Hi, folks. Basil Chapman sitting in for Steve and Tom. It's my pleasure to be here. Thank you, Steve, for doing the first hour. I know that you were under duress, but your dedication showed right there. You're at the mic, and it's my pleasure just to take over right here. And I'm part of the team here at TFNN. This is the 10 o'clock hour. I usually do the 11 o'clock hour, 11 o'clock till 12, Monday, Tuesday, Wednesday, Thursday, and Friday. Yeah, TFNN's Eastern Time, that is, of course. And the number to call is 877-927-6648. Love to take your calls. Hey, let's look at this market. We've had a high-level consolidation. I was debating this morning whether to start a position in the DDM, which should be 200% long, the Dow. I wasn't sure of the mix of how the Boeing pullback would impact the Dow, and I thought it's better to stay with the stocks that we have in the long position, try to add another long position, and also to add another short position, because what I'm looking at is that there are certain stocks, and I'll talk about this over the coming 2 hours, that are forming forming hat-trick tops. And I'll just quickly explain that. A hat-trick top occurs in my work where I'm starting to see in the monthly chart signs that you're at the fourth highest peak, peak D or higher, number one. That's the monthly. That the weekly chart has gone to at least a peak D, or it is a double top with an alternate wave count, but it had previously made a significant peak, fourth peak D or fifth peak E, sixth peak F. But more important than that is that I need to get the trigger of the daily chart. That starts it off. Now, I'll do this during the break. I'll get my CD Introducing the Chapman Methodology, the CD book, because there's a section that I have on time frames. I'll find it because I don't want to talk it out because I don't remember it exactly. I remember what the gist of it is, but I love the way I'd written it up. I thought it through very carefully. So let me get that. But most importantly, when you're looking at time frames, what we're looking at is the larger tide. High tide and low tide. You've got that 12-hour sequence in the ocean. And what you're looking at is that within that tide, you could still get certain waves and wave sequences that even though the tide might be pulling back, there could be a couple of waves that really extend the push towards the beach and go further up the beach than the other waves, even though low tide essentially was on its way down and had already been triggered. So that's what I call rogue waves. But more importantly, once the tide has changed, you are not going to get a change of tide until the tide has completed its descent and switches to the reverse, going back towards high tide. That to me is very important. When I'm looking at monthly charts, if I'm seeing that the smaller time frames, first the daily, has to trigger the buy signal to buy mode, that invariably takes the weekly to a sell signal, not a sell mode. It might, but usually it's a very stair-step way of doing things. And then that tide in the weekly starts to drag down, if we're talking about a top, and that eventually impacts the monthly chart. As it impacts the monthly chart will go to, when the sell signal goes to a sell mode, a much stronger implication and upgrade in the weekly chart, invariably you're looking at the monthly going to a sell signal, and then it has to, a whole bunch of factors have to come into place to go into a sell mode in the monthly, and that implies time and price. Shorting is the preferred stance, because the tide is going to save you because it's going downhill. So I've got a lot of charts that are looking like that. We're actually short one that I believe is in that situation, and we're trying to short another one that I think is about to go into that position. We've had shorts before, very successful ones, where we've identified that particular phenomenon. Now let's go to this because it's very important. Talking about tides, on the charts that you're looking at right now, this is the E-mini. This is the March E-mini September contract. What we're looking at here is in this section that I'm circling with my pointer. That is the 120-minute chart. Now, I know some of you don't get 120-minute charts, you get 60-minute charts, but that 120-minute chart is really important because it is the time frame I find perfect between the daily, 24 hours trading, of course, in the futures, but not 24, but close to 24, and in the daily it would be the usual 6.5 hours. And then you get the smaller time frame of just 2 hours, and then, of course, you can get all your others, 60 minutes, 30 minutes, 25, 2 minutes, 1 minute, whatever you want. So I love that. And look at this, that rectangle formation that I was discussing in my show the other day, back on the 3rd, I said I believe we probably started a rectangle formation. We have been stuck between 1461, actually 1463 was the peak E high, but basically 1461, to the bottom, which was 1450, which broke, and we went to 1446, and that's the boundary, 1446 to somewhere around 1459. That's been the narrow trading range for days. It's just an amazing thing that it can happen after the spectacular move from 1382.25, the low on the 31st, all the way to 1463, the high of the 6th, I believe, the 4th or the 6th. So that really is important, because that tells you that there's a high-level consolidation going on in the daily chart of the E-mini contract. And the stochastic, which to me is absolutely imperative in my work. I love to have it. You can have a naked chart. I use those all the time where there are no signals at all. Maybe just a 9-period moving average. But I love it when you can put all these things together. MACD strong, stochastics at 91%. Man, that is buying pressure. Now, talking about buying pressure, let me just run the numbers. We're going to go to our first caller. We're waiting on line patiently. Let's go to the Dow is up 75 at 13,404. I think if it can hold to about 13,420, that's going to be a really positive sign. I'm really pleased to see that, because the way the market was the Dow was being dragged by Boeing yesterday, with all that bad news coming along. I needed to see how today unfolded, because my bias and my thinking has been a bias towards the upside. We have some very nice long positions in my opening call. That's my daily newsletter. We've got implemented these short positions. One of them is just, it's a sector short. It's a big gamble to go for a sector when you've got mixed well, you've got some strong and some weak stocks in it. It's within a penny of where we shorted it. It's a penny profit, let's put it right this very second. And another one that we are short, which is, let me just double check. I don't want to speak out of turn. Yep, it's still down from where we shorted it. Now what's very important is that the S&P is up 6.28, so it's a little bit behind in percentage terms of the Dow. The Dow turns out all of a sudden to be stronger than the S&P, just by a little bit. It's up 0.57%. The S&P is only up 0.45. I actually like it the other way around. I like the consistency when the S&P, the 500 stocks, are a little bit stronger than the 30. But anyway, that's just my own bias. Now, this is very important. You've got the Qs up 14, so they are participating. Even though Apple is only, Apple is just barely, let me just have a quick look. Yeah, Apple's down 4 at 521. So you've got that. You've got gold down 4. I'm not impressed with gold. I think we're getting close to a point where we can have a pretty good rally. No, a bounce, I'd call it. A good bounce. But or maybe we've just had the bounce. I don't know what it is. I'm just not impressed with gold. I think gold is going lower. When I see the for sale signs, when I see the for rent signs on all those little stores that have opened up selling gold, then I'll know we've got a major bottom in gold. Until then, I think it's going to be lower highs and lower lows. Even if they count in rallies, silver's down 22 cents. You've got high-grade copper. Now, that's very important. High-grade copper is up $3 at 3.7. So I like that. That's in a trading range. I prefer to see it up. And bonds are down 3.30 seconds. Let's go to our first caller. We've got Paul in Boston waiting patiently. Hi, Paul. How are you?
Good. I have two questions. One a general question and one a stock question.
Fire away.
Okay, the general question is on the VIX.
Yes.
I know you follow it close, and I've noticed it's been going down in the last couple of days. And what does that signify for the market?
Okay. All I'm going to do is to remain as strict to my discipline as possible. I'm not going to get into the esoteria of trying to analyze it in other people's terms. They could be right, they could be wrong. I actually couldn't care less. All I think of is when I see the VIX down here at 13.30, now it's 13.35, VIX, I just make it as simple as possible. The volatility index is a measure of buying intensity or selling intensity. To me, that's the simplest way of looking at it. And at this particular point, 13.30 was the most recent low of the past. Wow. The past. When I say wow, I'm going to say wow again. The past. Wow. I need to look at a monthly chart. Oh, my goodness. This is the lowest that the VIX has been at.
What does this tell for the market?
This goes back to 2006, 2007. It has not been as low as that particular point. What I believe it is it's buying pressure, and that's just saying that in terms of support and resistance, that's the way I look at it. Buying pressure, selling pressure. It is intense buying pressure. There are buyers coming in, and in this particular instance, I would not be surprised if the buyers that we are looking at, one of the reasons why it dropped so sharply, and I think Larry had pointed out in his show that it had, first of all, one of the biggest gaps in recent history, but it certainly had one of the biggest percentage declines. I would say, and I'm not sure about this, but I wouldn't be surprised if it's in the last 15 to 20 years. To me, that is really important because it's saying that the volatility index cannot be ignored. It is at a point, I'm just going to go to the black chart here because this is where you can see it best of all. The volatility index, and I'm going to squeeze this chart close. Would you be looking at Tiger TV or on your mobile phone or something?
I'm on Tiger TV.
Okay, so you can see if this particular chart, even without looking at the details, just half squinting through your eyes, you can see that it's in the lowest area that it's been in for a very long time. That is buying pressure. Let's get your second question, straight after the break.
Sure.
Okay, Basil Chapman sitting in for Tom and Steve. Dow's up 82.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Yes. Hi, Basil Chapman right here. This is the Tiger Technicians Hour. And, I wanted to mention there's a Great Panther Silver Super Silver giveaway taking place the week of January the 28th. So be prepared for that. Every hour that we're on the air, 9 a.m. to 6 p.m., Monday through Friday, we'll be giving away a silver coin or a bar to one lucky winner that will be randomly drawn from those that enter. So it's completely free to enter, no strings attached, and all the information is available on the front page of TFNN.com. We'll be giving away over $1,000 in silver throughout the week. $1,000 in silver. So just go to the front page of TFNN. What can I say? It's just the Great Panther comes up with these fabulous and very entertaining raffles or lotteries or whatever you want to call them here at TFNN. It's just fabulous. So we're on the online right now with Paul in Boston. He asked me about the VIX. I said that the VIX in the teens going lower is buying pressure. If the VIX volatility index, I don't know what's going to push it now from the 13.37, almost about to take out the 13.30 previous low. What it's going to do if it does, let me just do, was that 13.30 previous low? 13.30 was the low of August. So we're almost there. We've hit we did it. We hit 1322 already today. We're underneath it. So the 9-period exponential moving at 17.27. Watch 17. Let's call it 17.30. If the VIX goes above that, that will start to intimate selling pressures coming in. But as long as it's down here, that's going to be buying pressure, and that's very positive for the market. Your second question, Paul.
Yeah, I wanted to have you look at a stock, RAD.
Oh, man, I was looking at that the other day.
This thing keeps wanting to break out, and is this the breakout that's real?
We had, I haven't, maybe I can find it. I'm sure by now I've lost it on this particular chart because I've had problems with the black charts. Oh, it doesn't have a single notation. We once had RAD, which is which is in fact a Rite Aid, a pharmacy company, and we had great profits, and we've missed out periodically trying to get in, because what happens when this thing takes off? When it takes off, you know that because you've looked at the chart, right? It really takes off. And what happens is when peak A, B, and I looked at this the other day and I thought, a C minus, but it looks very much like it was not a C minus. It went to a peak C. So let me just explain what I'm looking at. On the charts that you're looking at, folks, what we're looking at here on the left side, I'm now going to drag it over. I'm just going to quickly put in the notation so that you can see the consistency of this chart, that when it starts to rally, it just soars to the upside. Once it gets that, and I never know whether it is because of the sales technique or whatever goes on, because I know that I know she's still there, but there was a woman who was the CEO, and she was interviewed by Kramer years ago, and she said, "Oh, everything's turning around. It's just I'm so positive about the company," and I think it must have dropped. I think it must have dropped about from the 4s or something like that, right down to the 1s. It was just, it was a terrible thing. It might even have been higher. Then I thought, uh-oh. Well, it's had one buy mode that went from 1.14 on the 11th of June 2012 to a peak D. And the Chapman way, the methodology I use is to identify the lowest low bar. From that, if it goes from a buy signal to a buy mode, it should go to a leg D. Most of the time, the thing just goes straight up. To the last part of C to D just goes straight up, and that's what it did here, and it went to 1.46 on the 2nd of July of 2012. Then it plummets, and it loves to plummet. It goes down to 1.05 the 1st of August 2012, and then what does it do? It starts a stair-step maneuver, goes peak A to peak B, and if you're looking, folks, the reason why I want to show you these charts, look at the fast-moving average, the green line of the MACD, and you can see that that alone is a fantastic guidance in telling you that that's the price. It replicates the price movement. It's a 9-period differential between the 26 moving average and the 12 moving average. Now what happened in the MACD? So it goes quickly from C to D. It goes above the 200-period exponential moving average for the second time in a few months, and it goes to 1.35. Peak D plummets down to where? 0.95. I looked at it recently because it must have gone by the ticker. I'm a ticker reader, so it went past the ticker on CNBC, and what happened was it must have been that gap up on the day of the 20th of December. So this is what I'm looking at. So it goes peak A, peak B, peak C, pulls back sharply to the 9-period moving average, and we're going to stop right there. You hold on. If you've got a moment to hold on, and I'll give you my analysis. Okay, because I like it. I'd like to tell you the methodology I'm using. I'll be right back. Basil Chapman sitting in for Stephen, Tom. I'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just one trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. This is, of course, the Money Masters, and I'm doing my best right here, sitting in for both Tom and Steve. And just quickly going to finish this chart up here. There it is. Peak A, B, C, D, S, D, E, and we've got an F. All right, good. I'm all ready. So we're online right now with Paul in Boston. He had asked initially about the volatility index. I said the volatility index in the teens or going to the low teens, very positive. It indicates buying pressure for me. Then he asked me about a stock, which this is the funniest thing. I actually looked at both yesterday and the day before, and I liked it. I'm always very suspicious of it, and I just thought how it handles the 9-period moving average, one of the techniques I use, which is that black line that I'm showing in the white background chart, is going to be very important. So I'm going to make a suggestion based on the history of RAD, which is Rite Aid, and folks, just don't get carried away because it's a $1.33 stock and you buy 40,000 of them. It's not the way to do it. Make it a small proportion of whatever whatever it is that you're looking at. And at the same time, in terms of your portfolio, I like it. I'm going to recommend you start a position. Do you have a position at all?
No.
I'm going to suggest you start it at 1.37. Now, I don't know what your risk tolerance is, but when you've got very low price stocks, I try to talk about 10 cents and 15 cent stops. That's it's a big percentage, but it's a tiny price, but you have no choice. I prefer, when I'm looking at those very big $300, $400, $700 stocks, I can use a much better number as a stop or a buy stop. So it's very difficult here. I like it. I believe that it's consistency that has gone to peak D, the fourth highest peak in the Chapman wave, every time that we've looked at it, both in the weekly chart and the daily chart, for a long time now, certainly since late June. But in the weekly chart, it goes even further back. I believe it's going to go to 144 and higher, $1.44 and higher. So start a position here, 137. I wouldn't make it a big position, but start a position here. I would absolutely say that I would personally have a stop of 128. That's just underneath yesterday's candle. You can have a little bit wider stop of 125, which 126 was the low of 2 days ago. I like it. The moment if it can get to 1.40, I would add another small position, and that small position has to have a much tighter stop, because the moment if that thing takes out 1.43, I wrote that wrong. 1.46. Yeah, if it takes at 1.43, then it's probably going to test 1.46, go to 1.47, and at that point, it's in leg D of the Chapman wave, and every other D has actually started to decline. So your shorter-term position at 1.47, I'd either tighten it up or I'd take profits, and I'd keep the core position, or I would see if I can ride it out even a little longer, because the MACD needs to deflect back up again, and the stochastic at 70% needs to get to 80%. So I like it, and I'd go a short term as a position. And
you consider it a long term?
I'm going to get to that right now. If for the first time in months, almost a year, it can close above 1.49, that's on a Friday in the weekly chart, that would be very positive, and then I would say to you, you know what, I think this is a stock that's going to attempt to get to the 158 to 163 area, and that would be going step by step. That's the way I would look at it. It has a possibility of trying to tackle the candles of the weekly candle of April the 13th of last year, which is 1.76 to 1.61. That's the candle that would be my upside target. It has to close above 1.47 is the 200-period moving average in the weekly chart. It has to close above that, and I want to see the stochastic holding above 80% and staying there. And then I think you've got yourself a nice percentage gain, and it could turn out to be a short-term trade that goes to an intermediate term position, buy and hold. That's the way I would look at it. If it breaks underneath 1.25, I say, whoa, that's the first time it's done that, failed like that with such a big move off the bottom. I'd be hesitant. But I think you've got a good eye. I think you've got the right stock. And keep it as a very small part. Well, I don't want to tell you how to trade your portfolio. I personally would keep it as a small part of my portfolio. If it makes a really good gain, that's all you want, is a very good gain and a nice percentage win. So I hope that helps you, Paul.
Okay, well said.
Thank you very much. And thanks so much for calling.
Have a good day.
Thanks, you too. Let's go to John in Knoxville, Tennessee. Hi, John, how are you?
Good morning, Basil.
Haven't heard from you for a little while. How are you doing?
Good, thank you. Good. I've called you a few times about this stock, Duncan.
Yes, and this was one of those that I said I would like to have in the portfolio as a buy and hold, and I bought it, but I didn't hold it, and I'm regretting it. Why? Do you still have it?
Yes, sir.
Okay. Duncan Brands Group, that's Dunkin' Donuts, I think they're just starting to go to the California, to the West Coast. As far as I can tell about the stock, almost everything I'm looking at says, just on a very short-term basis, it's a leg. I'm going to make a change here. I'm going to call this to be as conservative as possible. That was an instant restart. I'm going to just give me 1 second. I'm just changing things around. If you, folks, you're looking at my charts, you'll see that there's a consistency in my notation of the technicals. That is the 9-period exponential moving average, the MACD over there, the stochastic over there, and I'm going to call this a new buy signal in a Chapman wave instant restart. In my I forgot about that. I was going to get to my CD. In my CD introducing the Chapman wave methodology, there's a technique that I developed over many years. Cost a lot of money. The tuition's expensive, and I developed this technique called the instant restart. Within 3 bars after peak D, the 4th highest peak, you break to a new high. What happens after that? It can take you to another buy mode to peak D. It's in leg D right now with the doji, but it can even go to E and F. And that's really important. And the weekly chart has got a lovely, the stochastics at 84% in the weekly, 90% in the daily. The MACD's good in both instances. It's only made a peak A at 37.02 in the monthly chart. I think this is in the beginning of a big move. I'm going to call this conservatively as new leg B up, what I call gray B, but it has to take out the previous A at 37.02. And so, in other words, there's a little buy mode within the buy mode. I like to be conservative and get to the letters as quickly as possible. That way I've got a heads up in case there's a problem and it stops short to it. I like it. I think you're in a great position. I tell you what I would say, that if this thing at 34.87 takes a digestive period and pulls back to the 32.50 to the 32 area, that's where, if anyone hasn't initiated a position, I would do that as a shorter term position. If you're looking at this longer term, I would say that if you aren't in it at all, you could just nibble. Even, 34.86 at recovery highs, not the all-time high, but recovery highs. Why? Because everything about it has the look of a persistent stair-step move. It pulls back, then it goes to a higher high, it pulls back, and it's walking the 9-period moving average in both the weekly and the daily charts. So I think you've got a fabulous position. Would you be looking to add to it or not?
I haven't thought of it, but I would like to.
Okay, because what I was going to suggest, keep your position as a core position. I think you're in at about 31 or something, right?
Yes, sir.
Yeah. So that to me is a core position. I would take a trading position, and this will be a much smaller part of your portfolio. If it pulls back in the next 2 weeks towards the 33.40 to the 32.20 area, just nibble on a small position, and that small position I would start to add to as it gets closer to the 34.20 area. So you nibble on it round about somewhere around 33.44 to 32.80. That's the area that I'd be looking at it. Preferably, it's at about 32.80. Somewhere around there would be perfect. That's 2 points down. It doesn't usually drop 2 points very quickly. So if it does that, then I would consider that's a position at the trading part of your position. But looking out, I really think you've got a great entry point, and I would not be surprised in another 6 to 8 weeks if we're looking at Dunkin' Donuts or Dunkin' Brands in the 37.80 to 38.50 area. So good eye.
Okay, thank you, Basil.
And good patience, John. It's nice that you were in it and you just held on. Thank you, John, and thanks for calling.
Basil, if you do get any extra chance, could you look at SIRI for me?
Oh, that's one I wrote down in my opening call as one that is on my watch list, because another one that I wanted to nibble at. You know, folks, there's a portfolio that could have been Siri, S-I-R-I, Duncan, I was just thinking of it the other day. Duncan, Ford, or General Motors. I'd probably choose Ford out of the two. Actually, either one of them, or nibble on both of them. You can be building up a portfolio that and one of the home builders on the next big pullback in the home builders, and you can have a nice core position as part of your portfolio. It doesn't even have to be a big position. So I will do Siri when we get back. We've got Greg on Portland waiting. So I'll do it. If I don't do it now, I'll do it in my show at 11 o'clock. It's a good-looking chart. So I'll be right back with, thank you for calling. We'll be back with Greg.
Thank you so much. I appreciate it.
My pleasure. Let's go to Greg in Portland, Oregon. Hi, Greg. How are you?
Hey, Basil. How are you doing?
I'm very well, thank you.
Good. I was looking at Clean, C-L-N-E.
Okay, yeah, I never know how to pronounce it. Whether it's Clean or Clean Energy Fuels Core, but the symbol is CLNE. So CLNE is Clean Energy Fuels Core. It's at 13.79. Folks, here's an example. I wonder if I've got this on my black charts. I have these all notated. Let me just see if I've got it. I'd love to I haven't. I would love to get those. They're there somewhere. I'd like to get them back because I've written down when different people have recommended them and so that sort of thing. It's just fun to look at. I'm going to call this a peak E/A as possible brand new move. Now, this is what we're looking at, folks. This is a stock that's at an incredible whipsaw action. The last low that it made, down at $10.90 on the 5th of November, went to peak A, peak B, peak C. Then it went to peak D, just underneath. You see that orange line there? I must find out what color that is. That orange line was on the white background charts. That white line is the 200-period exponential moving average. Look how important. If you add just a few of these techniques, slowly but surely, use another chart that you don't look at all the time and use it as in your experimental chart. And then you will find that you can use some of these techniques to your best advantage and then just get rid of the ones you don't like. Nothing's locked in stone. Well, for me, they are locked in stone because they've been so consistent. But if you look at CLNE, Clean Energy Fuels Core, in that big fuss in 2000, going into 2012, all the way to the high of the week of the 21st of March in 2012, where it hit 24.75 after 23 round number low, gap up low, in fact, that stock has been in a decline ever since, and it's the pattern. Oh, I really need to get that CD out. It's in a pattern that I call the H goes to a continuous M pattern and then breaks to a lower low, and that's exactly what we're looking at. But look at how important that 200-period moving average is. It was resistance back in 2011. In 2012, it was support. Then you didn't have to worry about it because the black line, the 9 EMA, took over. Then the 9 EMA was resistance on the way down. And then it broke. It tried to hold the support back in 2012, back in May, tried to hold it. It failed. It went under it. And after that, it was tremendous resistance. And this is the first time since July of last year that it's even been able to get this close to the 200-period moving average. And that moving average is acting now like a magnet. It broke above it a few days ago. Now it's hugging the line. The stochastic's at 88%, and the MACD is good. Now the question I'm going to ask you is, do you have a position, Greg, in this?
Yeah, actually, I started the position on November 6th, so it was right after. And then when it hit the peak D, yep. I sold half of it. I meant to get back in at the end of December, and I missed that. I didn't it was a senior moment.
Hey, but let me tell you, I'm looking at this all the time. I'm looking at Siri, which is on my list to buy. I'm looking at Duncan, which was... These senior moments happen all the time. In fact, what happens is, just for a moment, you're in disbelief because you're about to buy it, and then it suddenly gaps away, or it moves a little sharper than you would have expected. And then you say to yourself, oh, have I missed the entry? And then the next day it goes higher, and it just keeps doing that. It doesn't allow you an entry point. And then when you finally say, okay, I've had it, I'm getting back in, that's the very moment you almost are assured that that's the very moment that it's the most vulnerable and it starts to pull back. So this is what I'm looking at. The 120-minute chart, I'm not sure what the gap was about. Do you know what the gap? I think this is one of the times I do want to know what a gap is about. Do you remember what happened on the day that it gapped up January the 2nd? Was that just because of the market? That wasn't news, right?
No, I think it was just market.
Okay. I'm going to suggest something. You know what? I'm going to take this break coming up here. This is the final break before the end of this hour. I'm going to take the break because I want to think this through. I've always been very suspicious of this stock. It seems to be a stock that's hyped a lot. But at the same time, I want to see if there's something there technically that I can latch onto and say, this is what I'm looking at, because you're in a good position, you're making money, let's see what happens. I'll be right back with Greg Important.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks. We are back. Basil Chapman sitting in for both Tom O'Brien and Steve Rhodes. My pleasure to be here today. This is, of course, Wednesday the 9th of January, and we're on with we're on with Greg Important. I'm looking at CLNE, and CLNE is clean energy fuels. Of course, I've read it about 10 times. I just did a quick study on it with a white background chart. I'm going to make a couple of suggestions here. The weekly chart, this is the quickest. I've had to write this down in my book on chart formations. Maybe there's 60 different categories here, 50, I don't know how many. But this is the quickest. Peak A to B to C to leg D, and it's not yet a peak D, bumping up against the 200-period moving average resistance at about 14, somewhere around 14 in the weekly chart. That's going to be important. The way it's bumping, if it can break out, that's going to be really important. The stochastic is at 62% in the weekly. It's at 20% in the monthly, but it's at 88% in the daily. So now you have a position. I would prefer to think of that position as kind of a core position now, and I don't want to mess around by getting something and taking a couple of 20 cents and 40 cents losses, because all of a sudden you're going to be kind of break even on the trade. I'm going to say have patience. If this thing breaks above 13.98, that would start leg B up rather than an F in the daily chart. So I'm going to make a recommendation. At 13.75, I would add just the tiniest little bit. The reason is, in your mind, you want to separate your core from the new position. But if this thing dips and it goes to 13, the 9-period moving average is at 13.43. I don't want it to dip that far, but if it gets anywhere to 13.50, holds, and then starts coming back, as it makes that little U-turn, I would add another small position. The best thing is that you add right now, and it takes out 13.98. What I would recommend is at 13.99, you add another small trading position. So you got your core, you got a trading position right now that you, if you think about it, if you want to do that, small little trading position, that small position gets added to at about 13.53 if it's holding, and then goes back to about 13.58, 13.63. Must make a little U-turn. I don't want to drop to the 13.43, because if it goes underneath that, it could go deeper. But if this thing holds, and by Friday afternoon or Monday morning it's starting to test and it breaks 13.98, it goes to 13.99, another small position. That position has to have a very tight stop of about 18 cents to 20 cents. So you got three positions. Core position, very small one you might nibble on now. Breaks above, then you add to it. If it dips below and makes a little U-turn, starts coming back, if you want, you could add another little position. I'd probably say the third position, I would wait for a break of 98, and add to that position. Hope that helps you, and congratulations on your entry. That was a great entry.
Great, thank you.
Thank you very much for calling. Greg in Portland. Let's go to Jack in Deerfield Beach, Florida. Florida sounds good right now. Hi, Jack. How are you?
80 degrees. It's too hot.
I didn't want to hear that. You wanted to look at what?
Dry ships, DRYS.
Okay. Folks, dry ships. Wait a minute. Is there something going on here? I did the notation on this. I wonder if I did.
Right.
I just want to see if I did it in the black background chart or not. No. Unbelievable. Am I losing notes? Am I losing these things? Or am I losing my mind? Okay, let me just quickly do a notation here. I want to do this before the bell rings. B, that's all B, that's all B. Are you able to hold through to the next hour?
Yes, sir.
I'm going to ask you to hold through to the next hour, and I'll tell you why. A lot of us are looking at the shippers. Dry ships is one of them. Let me do a little bit of a study during the break. I'll renotate all these charts. Damn, I just renotated. I'll do it again. We'll be back with Jack in Deerfield Beach for my show, which is usually at 11 o'clock, and I'll be right back at 11 o'clock. Stay tuned. Dow's up 75, S&P's up 575.